Okay, what you guys want to do is you want to add this table into your report and into the PowerPoint presentation. So portfolio styles, I don't know if that's the right, or maybe portfolio allocations. So you want to have passive, target, and active. You want to have the target in the middle. Maybe you bold it or make the font a little bigger. So that's really the one you want to focus on. Then you're going to have the passive and you're going to have the active. You're going to have the companies, the allocations, 100%. You're going to do it for the these two, right? We're focused on the target. You're going to have the expected return ranges and you're going to have the beta. So right off of that, I know what the three products are. I know what the allocations are, the portfolio style. I know the portfolio performance, and I know the risk. Okay. And then here's the steps. How do you come up with the target allocation? I get that one all the time. You got to go through these steps. Okay. So the first step is you're going to use the portfolio, the passive portfolio allocation. Then you're going to set the minimum maximums within that. Okay. Then you're going to adjust the allocations based off the active portfolio optimization weights. So the active portfolio did a really good job of telling you what stocks have outperformed over the long run. So you're going to overweight a little bit more to those that have the strongest weights from the optimization. Then you're going to consult your fundamental securities analyst, and they're going to give you the that printout, that Excel spreadsheet that has the stocks sorted from premium to discount. And you guys are going to talk. And you're going to adjust the stocks that have the highest premiums. So you're going to overweight those a little bit, and then you're going to underweight the ones that are going to be trading at a discount within the next 12 months. Then you're going to consult the technical securities analyst and confirm the over and under weights based on the technical analysis. And your technical securities analyst is going to say, oh, this stock, Microsoft, has been in a long-term upward trend for the past 3 years. Microsoft is coming out with new products. It's basically a monopoly. It's got locked-in products. The press releases and the quarterly reports that have come out recently show that the earnings, growth expectations are going to be consistent going forward. Therefore, we think that we should continue to overweight that stock. And that should be confirmed from the fundamental securities analysis and maybe even from the optimization procedure. And then you're going to underweight. So you're going to be looking at the technical analyst is going to have to conduct the technical securities analysis and then consult with the portfolio manager and the fundamental analyst confirmation of what stocks should be over and underweighted within the portfolio based on the technical analysis. So not only are you looking at long-term and intermediate, stock price trends, and momentum, but you also want to be looking at the RSI and the MACD and the trading volume, which is really a great indicator. But you don't want to be overweighting stocks that have been in a trading range for quite some time. That doesn't make sense. You don't want to be overweighting, stocks that, have been in a sideways pattern or in a downward intermediate or long-term trend. So you have to confirm, and discuss. So everybody has an input into the final allocations. And then once you set the target allocation, you save down your Excel spreadsheet, your back test, forward test Excel spreadsheet. You've already saved the passive down to active, and now you save the active or the passive down to target. You go in, replicate the passive weights, set the min-max constraints, overweight those stocks based off of your active portfolio strategy, and then over-underweight the stocks based off your fundamental and technical securities analysis. You should have the back tests should already be done. Your forward test, the 3-month, done. 6-month, done. You might have to update your 90-day updates, right? You might have to update those. And then what I would do is add a fourth front test and project where you think the stock prices are going to be at the end of December. So you have 4 front tests and you got the back tests to then do a really solid job of testing your portfolio performance. Okay? And then you're going to put all that stuff into your report. I don't really have much room, but I'll do it over here. And I did bring the reports. Where are those? Oh, here they are. Here are some examples of the final report. Now these are, I would say that these are pretty good reports. I think you can do a better job on the reports, with some guidance from me. Some feedback, some input, on the final reports and your final presentations. Okay. So that's actually a package. So that one's pretty good. You guys can pass them around. Is this too thick for you?
Oh no.
Okay. Well, what is this? What is this? What is this? What's this report?
Oh, it's the stock report.
Yeah, it's a portfolio trading system. This is a full report. This thing's probably worth like $25 million. Right? If you implemented this, you already know how much you made on the technical analysis and how much you made on the 3 portfolio strategies. Just imagine if you were a hedge fund and you raised $1 billion or $2 billion, you're making millions of dollars on that. My recommendation is do not give that to anybody. Do not give them the portfolio trading system. And you can show it to them when you go in for the interview, but don't give it to them. Don't give it to them until they basically, you have signed an employment contract with them. Because you're just basically giving yours and my intellectual property over to somebody else for free. You guys basically spent all semester on that. Usually we would pay a consultant to do something like that at least, $100,000. So I got 5 teams at $100,000, that's like $500,000 right there in consulting work. Okay, kind of gives you an idea of value of what you guys did. So just be really super careful. You can give pieces away, but don't disclose everything. Don't give everything away for free, because people will steal your stuff, okay? Especially your intellectual property, okay? Or just keep it and use it for yourself, but articulate what you did in the class. Use all the language, use all the logic that you've learned, and then just be really careful not to give away the story, okay? Because I'm basically giving you my IP, right? I'm giving you my IP, right? I mean, I don't care if you give away the book, or the homeworks, or the midterms, or that stuff. I mean, that's not my IP, except for the portfolios. But this report that you're doing is really super important, okay? So don't give it away. Make them pay. And if you do give it away to somebody, please let me know who you gave it to, if you do. But I wouldn't care. I'd use it for yourself. And if you want to build a business around it, I'm more than happy to work with you to build a business around it. Because I think you can build a business around it. Is that what we're doing, Ben?
That's what we're doing.
Is that what we're doing? We're going to build a business around the technical trading system?
So we're moving average crossover.
Okay. So for the, really the report and the PowerPoint presentation, so what's the first thing? What's the most important thing? Well, obviously you need a cover page. Obviously you need the cover page for both, but it's got to be clear exactly what you're doing. Okay. The second is going to be the recommendations. your recommendation? You got 3, how many products do we have?
3.
No. How many products, of the stuff that you've done, what can we sell? I got 3 portfolios, right? Can I sell the fundamental research?
Trading strategy.
Okay. I got the technical product. That's what, that's 3, that's 5 right there, right? Fundamental securities analysis, I can sell the research. Off of, I can sell the technical analysis with the recommendations of the stock, I can do that also. I could launch a long-short fund based on the technical securities analysis. I can do a buy on a leveraged, where the other fund is you buy on margin and you sell short. One is buy sell, the other is buy on margin, sell short. That's another strategy. Can't I also do another strategy where we just write and buy derivative contracts? Right, so it's all derivative based. Yeah, I can do that too. So I think there's like 7 products that we can sell. You want to be thinking about that when you're doing the presentation. So you're not bringing, this is not a product presentation. This is a program presentation. You're bringing a program to the firm. Not product or products, but a program. Okay. And that's even more valuable. Because if you do the math, on the 3 portfolios, $2 billion each, at 1 point each, how much is that? 3 portfolios, $2 billion each, a point each. How much? It's like $16 million right there. And then what about the long-short strategy? I could probably make, what, another 10 off that. The leveraged, maybe another 10. The derivatives, maybe another 10. So you're looking at maybe a $90 million a year program. Did I get your attention now? Yeah, now I got your attention. Okay. Now you're going to get somebody's attention. So the next thing you got to do is after the recommendations is you got to show me the economics. Okay. So this is going to be the revenue. So you got to give me the fee revenue on the 3 portfolios. I would throw in for the fundamental research. I could probably get, I don't know, I charge, $100 grand a year to my clients for 100 clients. That's like $1 million right there. We got $1 million there. What am I doing there? That's 60 million there. How much did you make on your profit loss? What did you make, like 300 grand? Right? 300 grand on $1 million. Right? You manage, what, 100 of those accounts? It's like another $3 million right there. Then you do your long short, your leveraged, you do your derivative strategies. You might be able to generate, I don't know, other strategies. I don't know, another 10 million. 60, 70, 71, 74, $74 million. Basically the second slide, right? Second slide, right off the bat, you show me the economics. Okay. Do I have your attention now? Yeah. Okay. Then what they're going to want to see is the portfolio performance. You're going to do your target first. Then your active, and then you're going to do your passive. Then you're going to do your technical analysis. You're going to show me the profit loss to see that as soon as possible. You're going to show me an example of the trades, and then you're going to show me the technical analysis, which is basically the graph. Then you're going to walk me through the fundamental securities analysis. You might want to take me through the logic, what were the steps that you went through. Then you're going to show me that table. Then you're going to show me the two Excel spreadsheets. You're going to show me the premium and the discount. Excel spreadsheet sorted from premium to discount. And then you're going to show me the financial ratios. Like that. In your active portfolio, you got to make sure that you show me the efficient frontier, right? Along with the so the efficient frontier should be in the report and in the appendix. Okay. And I'm going to need that table where you forecasted the expected returns for 2019. So I'll need that table too. Is that it? That's it, isn't it? Then you're going to give me the, you're going to show me the revenues slide again, and then you're going to show me the recommendations, and then you're going to have your signing page. And then after that, I would put in my references. Of all the references that you've used, and I would pack the references page. So you got like, company websites, Mergent, S&P, Value Line, Morningstar, NASDAQ, Yahoo Finance. You just pack that page, full of references so that you can show them that you not only understand where to go get the data, but these were all the resources that you use to basically conduct the analysis and build the system. Is that pretty much consistent with what the reports that you have? I don't think in the last semesters they did a very good job of this. Really hitting home the value of the program, right off the bat to the investment committee. Because what you're doing is you're presenting to a investment committee, and if we were a hedge fund, it would be the partners within the company. And every year what we do is we have an associate competition where everybody puts together a program of products and services to then help the company grow its revenue streams. So at the end of the year, usually what we do is we have 5 products, okay, for teams. Each team, 5 people, brings 5 new products to the investment committee, the program committee, the company's board of directors, or the company's partners. And then you had all year to work on it, and now you're in front of basically the investment committee, the partnership committee, making the presentation to then be accepted, rejected, or maybe you got to go back and do some work and then resubmit. So at the end of the process, the committee will vote on what teams will get allocations of capital and bonuses to basically go build that product. And then we will give you a budget to go build the product. And we'll give you another year to build the product, or you got to give us a timeline of how long you think it's going to take to build out this program. And then you, if you get selected, you guys can then head up each one of those subdivisions and then hire associates, data scientists, and programmers to basically build out the product and the processes, and then come back within 6 to 9 months and show us the data of those processes and products, and then with an estimation of when we can commercialize and launch those products into the marketplace. Okay. All right. So Friday we're going to do the chapters. If you can bring me presentations, you start putting together the draft of the decks, that would be awesome. We come back from the break. We're going to be doing 2 things on Monday and Tuesday, which will be, I will be reviewing all of your documentation. So you want to start putting the reports together, start putting the presentations together, bring them to me so that the week after Thanksgiving I can sign off on them, and you can do the presentations on that Friday. How long are the presentations? How long are your presentation? Yeah, like 8 minutes, something like that. So you're just whipping through these things. You're not reading every piece of information in the presentation. You're talking very high level, talking strategically and tactically. You're selling us on this system, on this program, and you're trying to convince us to pick you to deploy the trading system. So you're going to do that on Friday, and then you're going to come back. When's the final?
Wednesday.
Yeah, on Wednesday, so you're probably going to be working with me over the couple days to try to wrap everything up. Anybody who's lagging or can't get it together by the Friday, I'll give you guys are going to have to compete for the first 30 minutes of the class or the last 30 minutes of the class, but I get 60 minutes to do the exit lecture if you want me to do it again. Yep, okay. All right, and then I think it's on what day? Wednesday? Which is the last day?
Thursday.
Yeah, but I'm not doing Thursday. You're doing Thursday. Okay, and then after the final day, what I usually do is the, Dr. Larry's, birthday beer bash, right? From 2 to 4 at the Metro. Okay? You guys are all invited. Right? Have you ever been to it, Jake?
Oh, yeah.
You're gonna have to wear your sea sucker suit.
Alright, I'll wear it again.
I wear the sea sucker suit for that one. Okay?